Hello, you are listening to Dime to Diamonds. I am Suzanne Porske, owner of Phoenix Financial Group, a holistic financial advisory firm. I am joined today in studio with
Mark Farkworth, Phoenix Financial Group.
Rochelle Harp Accounting.
We are going to talk. February is the month of life insurance. It's always been that way. January, you get your sheets that you can buy at JCPenney's on discount and towels. February in our industry is definitely all about life insurance for some reason.
Didn't know that either.
You didn't know that either?
No. I do know that it's, dental awareness for dogs. And so we always get our dog's teeth cleaned.
In January or
February?
Oh, February.
So,
well,
I'm here. Okay. I'm excited about the.
I just all of a sudden you'll start seeing it now on TV now that I've said it, but it's life insurance awareness.
Yeah.
We unfortunately had a huge loss. Somebody that we got to see regularly, a young man who was in an automobile accident and passed away last week. And so that really spurred me to want to take time to talk about, there's a GoFundMe that was immediately set up. He was young, not married, no kids, nobody thought about, I'm sure, he didn't think about it. He's looking at a career and making ends meet and that kind of stuff. And it's so important to look and be aware of the people that are around you. We were talking about that. I had coverage on my children from a young age. It's not morbid. I never, ever wanted them, nor do I want them to ever pass away. Life is life, and transitions happen, whether we want them to or not. And it's important. And life insurance is one of those that can get really confusing really fast. And so that's where I just wanted to say, like you and I were talking this morning, GoFundMe's break my heart.
Yeah.
We have somebody in a local community right now. She's a single mother of 3. She started her own GoFundMe because her cancer diagnosis, she's very limited on her time left. And she started that for her kids. She said, had she been able to look back, she would have put that as part of the budget, $20, $30 a month for just a simple term life. I'm going to go all the way to say that even your grandchildren, I've done that. I have them when they're born, put it on, and that ensures their insurability. There are policies that say if you get it young enough that they are guaranteed insurability.
Right.
And that's another thing I hear is people wait too long, like this mom. Never thought that she would have cancer and be leaving her 3 children. And so when she was diagnosed, she couldn't get coverage. So I wanted to go ahead.
Yeah, I just the young people need to know. For example, on my kids, I bought all 30-year term policies. I know some people buy with the cash value and all that, but it's 30-year
term,
less than a coffee. I mean, it's less than $200 a year for $250,000, and then it also has conversion options. So you're talking about risk. You want to take care of that risk of your spouse's income. Debt, pay off your mortgage is a big thing. So
the cost of the funeral, that's what they're trying to cover right now. And funeral homes, people think that, oh my gosh, the stories I've heard in the 41 years I've been doing this, they go, no, it doesn't matter. I'm going to donate my body to science. Okay. They don't take all of your parts. They don't take, it's not a buy one, get it all.
Right.
Like you're not donating and they want your eyes. You got the rest that has to be taken care of, and they don't do it for free.
Yeah.
Now, maybe if you're homeless and they can find nobody, but they usually find somebody somehow, some way. And so that's why I tell even cremations are very costly.
There's an expense that goes into it. It's unfortunate that in these situations, people are trying to grieve, trying to process emotions, but now they have this other stressor, this financial stress that they've got to figure out how they can even come up with this money. But we're not even, that's just for the funeral. What else is going on, right? Someone may still have a home mortgage that they have to pay for. They may have cars that are making
income replacement.
Right?
Yeah.
A temporary buffer, and they don't need to be stressed about that in those few first weeks trying to figure something out. They should be able to take the time to breathe, to reprocess, to understand, to just,
And you're not thinking clearly. I'm going to tell you that right now. Even with my dad, he was 82. It still was a complete shock. And you cannot even put 2 words together. There's nothing that's common sense anymore. And then you're just like, oh my gosh, you want to honor him. I have found, and this has just been my observation, the younger the person is, the bigger because the funeral is for the people that are the survivors.
Yeah, right.
Yes, it is.
But you're right. The younger, it's more expensive.
It's more expensive and it's a lot more elaborate because of the grieving process of it.
Right.
You're not just going to go have, potato salad and all the church people bringing a side at a church in your 80s or 90s when it's in your teens or your early 20s. And it's a process. And so we said it was just an unfortunate thing. It was just a really bad car accident on the way to work. And you just never know. And then, like you said, the loss prevention financially and emotionally had somebody just, hey, I'm alive and I'm not going to stay this way forever. And I don't want to be a burden.
Well, and I think it's one of those, because in our society, death is so almost taboo. It's something you don't talk about. It's all that types of, I don't know. That's just how it is. And it needs to be less like that. It just needs to be, this is part of a process. And we're going to have this conversation. Obviously, nobody wants to die. Everybody wants to live, but that's just not a reality.
Right.
But being prepared and taking a burden off of others. And that to me is what these conversations are about and how it should be addressed and focused. It's taking that burden off of the person you leave behind, right?
Well, if you have a family or even just a spouse or anybody, I think it's kind of selfish not to talk about that stuff. And like, what if this happens to me? You need to take care
you got kids. I'm telling you right now, I'm talking to every one of you parents and grandparents. If they don't have it and they don't have it and you haven't had that conversation, you need to get it on them.
Well, you got income replacement, kids' college, a mortgage. I mean, it's a lot of things for a small family or any kind of family that they have.
Well, and I mean, we even talk about this a lot in businesses, right? We talk about it as a succession planning.
Yes.
But, even in my own business, there's discussions of what work am I doing? What certifications are required to do this work? And if something were to happen to me, who can carry this on? Who, what do you need? What does this person need? How would we divide that out? How does it, and it's not fun, but it's just part of it.
It's just part of life. It's adulting is what I hear some people when they'll come in here. I've got young kids that got married. I say kids because they're 20s and 30s, whatever. And they talk about life insurance. We talk to them about estate planning. They're like, oh, no. That's what grandparents do. No, you have a car. You are now just bought your first house. We just had somebody that they just bought their first house, a new young couple. I know, but it's not worth anything. No, somebody has to sell it. And so, and you put a down payment. It may not have been that much, $10,000, but it's still $5,000 or $10,000. So get an estate plan in place, so somebody can come in and step in and take over. If you're incapacitated, they can help, and if you pass away, they can come in, because you can't transfer title on anything like that in the United States of America without a judge or a trust. That's just the way it goes. Cars and houses. So we just kind of have those conversations. You don't have to have a certain amount of money or a threshold. And then, God forbid, you bring a child into this world. Yeah. You are now responsible until they can take care of themselves.
And then we see the insurability part where people come in and something's up. I've got cancer. I need to get some life insurance for my family. I mean, that's just.
It's heartbreaking to me.
Yes, yeah. It's too late.
These kids that are vaping right now, I have 3 people that have been on death's doorstep that have had stage 4 lymphoma because of the vaping, and they can't get insurance. Good luck. They're going to have to be in remission. They're going to have no evidence of disease for quite a while.
And when you're young, you can get these policies through now without physicals or anything like that. It's just they pull your MIB and then they approve it. And then the insurability, you do that long-term 30-year term, you have that coverage for 30 years. So let's say you're 25, that's probably past your kids out of the house. But then if something does happen, they also have those where you can convert it.
Yes.
Conversion options where you can convert it, extend it out.
So practicality. So what happens is like I have insurance that I bought on my kids. They get old enough and I'm like, okay, so part of growing up is taking over this responsibility. I will keep it because I will be the one paying for it if something happens, but your funeral or whatever, but I would like you to take on this responsibility. Yeah. And that's what we're talking about, just kind of transferring that. Right. Then if they want to go get additional insurance and they can't qualify, and I've had that happen more often than not, they didn't realize.
It's a tool to keep it because you have it there.
And they're guaranteed insurability because I've already established that for all the years prior to that. So.
I had a family on my baseball team. This was like we were in our 30s, 35. and they had bought a policy, and he got cancer, and it was in the last year of the term policy, but we had a conversion option on it, so we immediately converted to permanent, and he lived past that term part, but we converted it to extend it out, and it was the best thing ever.
Is there's so many different types of life insurance, and it reminds me of Medicare. You can strip it down and it's not that confusing. Every single policy is a term policy. No ifs, ands, or buts about it. That's in the chassis. That's inside of there. Now, if you have a savings attached to it, or it's whole life or universal life, even your annual renewable terms, those there's that in there, but they're all term policies.
And the term policy, go ahead and explain that, because I know we know what that means, but
it's for a term.
So it's set for a time.
It's time for a time frame. So you have mortgage insurance that has a term. It's for the term is the length of the mortgage.
Right.
It's going to cover for the length of the mortgage.
Cost is more if it's 30-year term, less if it's a 10-year.
A 10-year term, and it depends on the age. But
we're seeing some 40-year now. Some of our companies have 40-year. They're expensive, but they do have.
They lock it in, so it's a term. It's locked in. On straight term, it's locked in. You're locking in that term for 30 years. So they average out the cost of it, and that's what you pay.
And the conversion options don't really cost anything. You got to buy the right type of policy, but it's nice to have that on there too. So
then at end of term or right before end of term, they have the option to then extend it to what you're saying permanent.
Yeah, it'll be more expensive, but but what it's for is like that situation with a parent on a baseball team. He can't get insurance. So we're going to extend that out to take care of it. And everything.
There's accidental insurance. That too is a term. It just depends if you've got how long you have that account with the bank that's giving it to you, that is offering you that for 10 cents, you can get term. Are you accidental term? Accidental though, I've never in all my years seen one of them paid out.
Yeah, no.
As in the case of the friend that just passed away, they would, even though it was in an accident, they would call him at fault.
It goes through a long claims process.
It goes through a very long claim process. I had a dad who swerved in front of a semi truck to prevent them hitting his wife and kids behind him. And his head was decapitated. Like, he checked all the boxes for the accidental to be paid out. And they came back and said he was at fault. Had he let the semi truck hit him, they would have paid it. But because he swerved in front of them to make the semi truck swerve, he was responsible. So if you're responsible for the accident in any way whatsoever.
And check your policies. We have had a lot of people too, where they think they have a normal life, a regular life insurance, but it's just an accident. So there's a lot of people.
If it's cheap, it's an accident typically. And it's tied to whatever credit card. You don't have that credit card anymore, or bank account or any of that.
And then let's talk about work. Your employer, your group plans have life insurance. Biggest thing on those, are they transferable? They usually aren't.
Nope. They're not
if
portable.
You leave that job. Yeah.
So we had a client, her husband worked for, is it General Mill? Who's in Glenpool? It was a toilet paper company.
Oh, yeah.
Anyways, he'd been there 30 plus years, got COVID, and then his department, they laid everybody off, and he got sick, and he never recovered, and he passed away. He'd been paying on that thing the whole time he was there, and he had no coverage. None. She's like, no, there's $1 million policy. And it showed me on his paychecks. They've been coming out. And I said, okay, this paycheck is like from this time frame, and we're here now. What happened in between that? And she goes, I don't know. I go, well, he's not a part of that umbrella plan anymore there. Right. He doesn't work there. So that's another thing. So that's why we just talk to your tax professionals or your financial professionals, because we've seen it all. We've been here, done that, and we can help navigate. Make sure that if you're going to pay for something, that you're paying for something you're going to have and you're going to be able to count on. And I'm not against the universal life policies and whole life policies.
It all has a purpose, but we got to talk about what it's for,
I think of the vehicles I had when I was a teenager compared to what I have now, even when I had kids. And then now, that's what it is. Life insurance is a vehicle, and it will change as you change and your life changes. Right. I had we had that one lady that had the land. She had that life insurance policy that was costing her so much money every month. And I said, what's the purpose of it?
Yeah.
Well, because most everything was paid for.
Yeah.
Correct.
Yeah.
All was paid for, everything. And even her funeral.
Was the last.
Right. And she says, they just told me I needed it. And she was, older in the 80s. And I said, there is literally Zero. If you're doing it to help offset taxes for the people that will inherit this, there's not that issue. You don't have that. You don't have those non-tax, that never before tax money. You don't have a sizable amount that was going to create that. Just all those different things we ticked off the boxes. And she's like, so let me understand, I can get this back in my budget every month. I go, absolutely. And then there's people that have 17, whatever rental properties and have all this stuff amassed. It's going to cause a tax issue for their loved ones. And that's where the proceeds from a life insurance are not taxable.
Not taxable. Another specialty is buy sell for partners in a company will buy policies on themselves. So then one of them dies, then they use that to pay off the spouse.
Correct. Yeah.
I mean, there's a lot of different ways it's used. So yeah.
Better options for people who are in partnerships to ensure that the company can afford to pay out. The
key man, if you have a partner, they buy a key man to, you know, that transition.
So do you have a life insurance policy on me that I don't know about?
Me and Rochelle.
Asking for a friend.
Yeah.
Asking for a friend.
You know, I'm not in the back now.
All right. That's neat. Just tell Amy how much it is.
Please take care of your families. Yeah.
Partner ones like that.
Yeah.
Both partners are doing it for each other.
Yeah.
Business is the beneficiary because the business is going to pay the other spouse.
Yes.
And buy out that interest. And it's no longer a partnership.
Very.
It's just a sole person. But it is a fantastic,
very good way to plan.
To make sure,
because that spouse usually doesn't want to come in there and help run the company. Yeah. Yeah.
I mean, like you say, the desire, like it's just both of it. It's just,
could you imagine? I just think of my spouse. No, he'd rather take a long walk off a short bridge than do what I do every day. But this is my calling, and that's where we talk about. Like at Kim, I mean, your wife does something totally different. It's not that they don't know, the aspects of what we do. Yeah. And then yours works with you. So he probably could do better transition of, he couldn't do this part.
I don't think he would want to do this.
No.
Let's try it.
No, she's the brand.
Let's invite him in one week.
I mean, he would do it because he'll do what he needs to for the business. But this would not be. I try to make sure I do what I enjoy and he does what he.
Yeah. There you go.
That's good.
No, that's true. Absolutely. All right. Well, I think we killed that one. Yeah. If you have people in your life that you know that if something was to happen to them, that you will be needing to help. Hey,
strategic planning.
Let us help you get some strategic planning in place.
And if you have policies that you don't know what you have, we'll be happy to look at them for you and see what you have.
Period. Yeah. If you have policies you don't know what they are or what you have, you do need to talk to somebody
and get them in a folder.
At least see who you're
organized. Get financially organized.
At least see who your beneficiaries are on it, because that changes quite a bit too. So anyway,
I had a client. He changed his beneficiaries about 2 weeks after, and then he went to Christmas and then he called back and took more people off. Yeah. As I didn't get the gift, he goes, no, I realized why I don't talk to them all the time. They just piss me off.
Nice gift.
No.
Should be on next week.
Yeah. He said, hey, do you want to be the executor? And I'm like, absolutely no way.
You don't want to deliver all that.
No.
Yeah.
Never.
Hopefully he has communicated to some of these individuals his desires, because otherwise you are leaving a big storm, and that's really
that would be a big old storm.
Right.
People understand that when you are doing
like you're irritating, and now I'm taking you off as a beneficiary.
You might have 35 people.
A justification of why they're being
right,
but I do think it is important to give them a heads up that you are or are not getting anything, because either way, people need to make plans.
Right. Yeah.
Mm-hmm.
If you're not, you don't really have plans to make. But if you are, you do have plans that you need to make.
Right. Right. All right. Well, this was short and sweet. I want to thank you guys for joining us again today on the Dime to Diamonds podcast. Make sure to hit subscribe and please share if you have a network of people around you that might be interested in some of this really basic common sense financial literacy is what I think we share. Mm-hmm. We're not for everybody, but we are for most people. And a lot of the stuff that we talk about, the blogs that we put on our website at phx.financial, all are relatable, I feel like, at least for our main client base, which is just your average, I say Joe, but we can't really say that anymore. Jill, average, whatever.
Joes and Jills.
Mm-hmm. The, they, them. But I feel like it's just the people that kind of get left out. We went to high school, college, got a job, started working, started saving, And now we're like, okay, we want to get ready for retirement. Plus, we want to turn around and teach our kids and maybe grandkids or whatever, our community. And that's who we talk to. So if you know somebody that could benefit from this information, again, share, like, send, whatever you do on that. I am Suzanne Porske with Phoenix Financial Group. Thanks again for joining us today.
Mark Farquhar with Phoenix Financial Group.
Rochelle Harp with Rochelle Harp CPA. You can find me at www.harpaccounting.com.
That's it. Thank you so much. And we will talk to you next time.